We have a shocker of a story for you this morning. It turns out that two of the largest mortgage players in the country, Fannie Mae and Bank of America, were rather incompetent in a deal they struck with each other last year. Now, sarcasm aside, Agnes, you've been looking at this. Right, it's not the hugest amount. It's about $500 million we're talking about here as an overall deal. But the way we're looking at it is that this is just emblematic of the problem that's rife across the mortgage industry now, even now, 5-6 years after the crisis first illuminated it.
You know, the funny thing is every time we're trying to talk about mortgages, we kind of keep coming back to this thing called mortgage servicing, which is essentially the paper pushing of, you know, home mortgages.
It's not the sexy stuff. It's not the have we made bad loans to people. It's simply how we making sure these people...
Keeping track of things, dotting the I's. Except mortgage servicing has been really terrible at dealing with delinquent mortgage borrowers and defaults.
This, of course, is the thing that just to put it in context, a year or two ago is some of the servicers had to stop servicing delinquent mortgages because they'd done such a bad job, right?
Exactly. And this is also kind of showing what a bad job is. Essentially, you know, just to probably oversimplify it, but the banks don't really have a whole lot of incentive to work with borrowers to keep them current. And so what Fannie Mae wants to do is basically transfer those loans to a servicer that is incentivized and actually can work with the borrowers. But that's going to cost money. So essentially what what Fannie's regulator found was that they paid about $85 million more, or agreed to pay $85 million more than they really had to pay.
So a 20% premium, frankly. So Fannie Mae turns out to be terrible as a negotiator, with a company, B of A, which turned out to be terrible as a servicer.
Exactly. And then coming together for this deal. So I mean, again, like, to me, it's a reminder. I mean, the Inspector General has some, recommendations, like why don't we take a look at some of these contracts that we're signing to make them a little bit more, airtight. But again, it's just a reminder that this is still not working. And the unfortunate part is that a lot of government programs that have been introduced in the last year or so still have to go through these banks and still have to go through the servicers. So again, it's just we keep
this whole servicing thing it's a mess anyway. There's a question of how much they should be paid and how it gets booked on their accounts. So I think under the Basel III capital rules, if you have more than 10% or so of your capital set aside for servicing rights, then you've got to put yet more capital aside. So banks don't know what they want to do with it. They're not sure how they're getting paid for it in the future. And at the moment, they're not showing that they're doing a particularly good job anyway.
Exactly. And as you said, it's not exactly sexy banking, right? So it's probably not getting some of the attention.
But this is the nuts and bolts. I mean, if you can't sort out the paper pushing, if you can't dot the I's, cross the T's, then where is everything else going?
No, exactly. And that's, for me, that's the distressing part. I mean, we just went through all of this, right? I mean, financial crisis, and we're still kind of looking at the very basic parts of trust, right, of the banking system, and it's still not.
There was one thing I remember from the deal that made it look slightly better, which is there was some kind of schmuck insurance. So if Fannie Mae didn't quite get the economics it thought from taking the loans away from B of A, then B of A gives some money back.
Exactly. But again, we're talking about a bar that's fairly low on this.
Well, I mean, I suppose the other thing is that we're talking about hundreds of millions and even tens of millions rather than billions and billions of dollars at least. So I don't know if that's a silver lining, but...
but this is only one transaction in other transactions they've done with the bank. So again, this is just we're looking at this as just an example of a system or of a model that is still really in need of repair.
Okay, well, with that, Agnes, thank you very much. And I'm sure we'll be keeping an eye on this mortgage business still looking shoddy after 6 years into the crisis. But stay with us. We'll be back with more breaking views tomorrow.